Well, howdy, folks. It's Mike again, and we've got another of the Back to the Basics, or Back to the Beginning, as I'd like to refer to them, episodes where they're targeted on a very specific item. Today, we're going to do breakaway gaps, how I like to trade them. These are really tricky, like really tricky. There's no perfect way of doing it. So, I'm going to walk you through how I look at them. They're very important. This is more of an advanced topic. So if you're newer, you definitely want to watch this. But for those of you who are veterans, you'll probably get a lot out of this. And those gaps are really, really tricky. I'm going to say that throughout this whole thing. They bring extra risk, but also a ton of potential reward there. So you want to know, kind of how to approach them. I'm going to walk you through how I tackle them, given how they break out. But do it your way. But the key is to really study them. And so I'm going to share with you a lot of different ways they break out, the breakaway gap, and how they look, ones that fail, ones that end up having huge moves. We'll look at some current ones, and then we'll go back and look at some historical ones as well. I've got a lot of examples, so I'm going to try to keep this one short, but it's probably going to be longer than some of the other back to the basics. So let's just get into this. I'm going to share with you but before we do that, let me tell you what a breakaway gap is, because maybe sometimes assume everyone knows. So there's various types of gaps. So a gap is the stock closes at $100 yesterday, and then the next day, we're talking about gap ups, the next day it opens up, let's say 102, 105, 110, 150, all sorts of different size gaps. Technically, a gap is just anything that there's some space there. So let's say it closed at the highs today at $100 at its high, and then tomorrow it opens up at 100 and a quarter. Well, that's a gap, but that's not what we're talking about. We're talking about some sizable gaps, but they do come in all shapes and sizes. And we're talking about breakaway gaps. So there's kind of three basic classifications of gaps: breakaway gaps, what we're talking about today, continuation gaps, and exhaustion gaps. So a breakaway gap is when something is kind of in a base or some sort of area of consolidation, sometimes big, sometimes short, and then it has this gap from there. That's what we're focusing on today. Now, the continuation gaps, stock's in an uptrend and it has another gap. That's different. That's not what we're talking about today. And then an exhaustion gap, that's the stock has been running a long time, typically part of a climax action, and it gaps way up. And that's typically when the stock is done or close to being done. Again, not what we're talking about today. We're talking about the breakaway gap. It's in a consolidation of some amount of time, and then it gaps up from there. How do you handle it? And so let's get into some examples. Let's see. Okay. So here we have market surge. I'm going to show you some current ones before we get into the historical ones. And I think the historical ones are a little bit more interesting. So I want you to know where to find these. And this is obviously market surge that, let's see. Okay, over in the list panel itself, right over here, go into reports, then go down to stocks. Let me close that a little bit. Okay, go down to stocks and then go to technical and then go to breakaway gap. And so this incorporates pattern rec in there and just shows any of those gaps that happen, and it has the event, a date on there, which so this is the day that the gap happened. Did the gap fill or not? So you can use this to study them. Then there's this old saying that all gaps fill. It's not true. I don't know why people say stuff that are just silly. Sure, if you wait long enough, every gap fills. Even that is not true. Like, company could get bought out and never go back, or it could take, 3-4 years for a gap to fill. So, all the sayings that you hear, they're silly. But people just say stuff and don't study it. I don't get it. But here's a percent gap, and then the daily price percent change. So let's just sort this by the percent gap so you can see they come in all shapes and sizes. Here's one, 40. Oops, I've got to change date on here. So this is a really big gap here. So 45%, all the way down to your smallest gaps, which are just this little 1% gap here. And that's an ADR. So they gap almost every day. So there's a little one here on 7/17. So that gap there. So just to see that there are different sizes there. So I went through this whole list and just put little flags on some that I thought were good examples. So here are the ones. I'm not going to get to all of these, but these are the ones that you'd want to study. Let me do this in alpha. Make it easier for you. And let's just look at a couple of these. And ASTS, and that gapped up on June 9th. So right there on this day. So let's look at it the day before. And that's when you're studying these, that's what you want to do is and put out of your mind that you know that this ended up happening. So let's just go to June 8th, the day before that, or June 6th. So here's what it's looking like. It's in this this cup formation, and that next Monday, you get this gap up and it breaks out of the cup without handle. This is showing power. So you want to stop and think for a second of what. Let me just stop sharing for a second. You want to think about the mechanics of a gap, just so you're not just looking at a bunch of squiggly lines on here. Think of what is going on. All of a sudden, there's some new information, typically, is what happens with a gap. Sometimes it's just like an upgrade or some new news or something. Most of the time in this post-Reg FD period that we're in, lots of them will happen on earnings. So 4 times a year, you're going to get gap ups and gap downs. And those happen a lot, and they can happen for all sorts of reasons. But you're having this imbalance with supply and demand. Everyone knows, you got supply and demand, and where they meet, that's where the price is set. So you've got the same amount of supply, the amount of shares that are out there, but now you've got this increased demand. And so the price has to reach up and match that. So again, in our example that we were saying before, the day before the price closes at $100, and that's the equilibrium. The closing price is the equilibrium at that moment in time. That is what everyone has agreed that the price is worth, stock is worth $100. Some information comes out, could be a competitor, could be news out of DC, could be anything. And all of a sudden, everyone thinks, no, it's not worth $100, it's worth $110. So you get this jump up. Now today we're going to keep it simple. We're not going to talk about pre-market or after hours trading. That's a whole wild, wild west, and that's a topic for another day. Maybe I'll do one on it. But most people should not trade unless you've been trading for years. Don't even think about trading after hours or pre-market. It's just, you're going to get taken advantage of, really. It's a bunch of sharks out there. I mean, I was trading today in after hours, but I'm recording this on September 4th, but there were some earnings after the close and some things moved. And so I just, but I've been doing this for a while, a long time because I'm old, but don't do it. Frankie goes to Hollywood, relax, don't do it. Just wait for the normal market to react. Like one person knows what I'm talking about. So the stock was at $100. Something happened. Everyone's valuing it at $110. So you're going to have people in there who are out of position, meaning they're shorting that stock to you. They're short the stock, and it's up there. So they're going to try to make that intraday look as scary as possible to drive that stock back down. Because if you're an institution and you're short this stock that's now gapping up, you want to pull out every trick in the book to get that stock back down, because that's going to be 110 on the way to 200, and you're going to use your ammo wisely. So you'll notice that on days when things gap up, the intraday can just be wild and crazy. And you can also have for a couple of days where they really put a lot of pressure to try to break that, because once it moves, it's really hard to get that genie back in that bottle. And the shorts know that. And sometimes they can put enough pressure on it to break it. And then they just go down. So it is not a given that a stock that gaps up is going to continue to gap up. It's this imbalance of supply and demand. And if that news is really material and it's really changed the value of the company, then that stock is ultimately going to go higher. The trick is riding that bucking bronco on the way up, because your primary job is risk management. It's not making money, it's managing risk and then trying to make money. And so if you buy something way up there, like, where is your stop? How much are you going to let it come back in? And that's a really tricky one to answer, because normally Bill would say 8% max stop loss. And I think that's a good rule to use. For swing trading, I use 3 to 4%. That's really tough to do on a gap up, to get it 3 to 4%. So when you're buying a gap fresh, man, you've got to widen, either have a be very, very precise with your intraday buys, or just have a wider stop, because if you have a 2 or 3 or 4% stop, you're going to get stopped out. It happens to me all the time. And lots of times I'll just still do that, a 3 or 4% stop on there, because I know if I put it to 7%, it's just going to come in as 7%, trigger that, maybe go down a couple more percent and then go back up. So this is a tricky one. Again, if you've never traded gaps before and you're new, don't start buying them until you've studied this for a while and you understand the pros and cons. So let's get back into the examples with that as kind of our backdrop. Okay. So, shoot. Okay, there we go. So now it's got this gap up. So how are you going to actually handle this gap up? And there's a few different ways, and we're going to start with the assumption that you don't have a position. So you're starting a new position. What I like to do is called a TWAP, time weighted average price order entry. And what that does is it breaks up your order throughout a set amount of time. So let's say it's first thing in the morning, and you have a stock that you've been wanting to buy, and then it just gaps up, and you don't want to be left in the dust, but you also don't want to buy it and maybe pay top tick for it and have it come in. So spreading your order out over time is a good thing to do. You can do it over an hour. You can do it over 5 minutes. Most people, I think, would benefit from doing a full day TWAP. So first thing you want to do is figure out how much are you going to buy, and that depends on so many things: the group that it's in, what the news was. Do you have any other stocks in that group already, so you don't want to have too much exposure, or do you have nothing in that group and you want more exposure? What's the risk of the stock? Is there another news event coming in a couple of days? A million different things. So what you can do is start off with just something small. Let's say your normal starting position size is a 7.5% position. Something I do, excuse me. Hopefully I remember to edit that out. So let's say your normal position size is, well, let's just say 10% to keep the numbers a little bit easier. What you might want to do is just start off with a 2.5% position. That way you don't get chopped up if it totally rolls on you, but also you get at least a toe hold. And that's what you're trying to do with these gaps in most cases, is to just get a position. Sorry for my breathing. I'm having, I'm still not over this cold. But anyways, so now you determine your position size, call it 2.5%. and you're going to buy that throughout the day. Now, if your broker doesn't offer a TWAP, you can just go in and just incrementally buy those throughout the day. Just set your little timer, on your watch or something. That's something I do all the time. And then, every 15 minutes or every half an hour, just go in and buy those amount of shares. Now, obviously, assuming your broker doesn't charge commission. Now, I trade through Interactive Broker as well as TradeStation. TradeStation, to the best of my knowledge, does not offer TWAPs, but Interactive Brokers does, and they don't pay me or anything. So this is not an endorsement. I'm just telling you what I use. And so I'll put that TWAP in. Now, if I'm buying it and it's moving up, great. I'll keep it on there, and I might increase that size from 2.5 to maybe 5%. And you can do that without changing your order. You just modify the order. But let's say it starts rolling in on me and it starts acting way too weak. Well, I can reduce that position size. Maybe I put that down to a 1% instead of the 2.5%, or I could just cancel the order and sell the stock. I do that all the time. It's not acting right. I just back out of it. So that's the benefit of a TWAP, because otherwise, if you're just buying it all at once, and sometimes you're going to get lucky, sometimes you're not. If you're doing the TWAP, it smooths that out over time, and you won't have a great price, but you won't have the lowest price, but you won't have the highest price either. You'll have something in between. So that's with this one. I would just put an all-day order in there. Now, if it started getting away from me, maybe got all the way up to there or up to there, I might just increase my order just to get done. But since this isn't a crazy type of move, I'm going to leave it there. And then let's just go out to the end of that week. So it's just inched up throughout that week. And a lot of people are just sitting, waiting for it, waiting for a pullback. And lots of times they don't ever happen. Let's go out to the end of the month. And that just kept going up. So those folks who were waiting for that, well, it never happened. So, this day was pretty much your best day to buy it. Then it went up 52% out of there in just 14 days. And if you've watched the Power from Pivot, I think I've released that one already. Yeah, released that one. Then you'll understand what that is. If not, go back and watch that. Let's go back to today and see what happened. So it went all the way up and then came back down. So, but we're just really focusing in on this part today. Otherwise, this will be 5 hours long. Let's go to the next stock in Alpha. So here's another one. So on 7/24, same thing. Just do a TWAP. Now, it was a little wild in here because it had this gap up over there that then failed. Let's go over there. Okay, 7/8. So this is the day before the first gap up, and just doesn't really look that good. And then you got this gap up. I would have been buying that, right? If I understood the story and everything. So you have a little tiny consolidation there over this larger consolidation, or really it's a cup with handle that broke out on that gap there, then failed. Now it's gapping up again. And we know that then, so I would be buying my position there. Then let's go out to the end of the week. And it's come all the way back in. It's closed a lot of that gap. Well, that's why you don't buy a huge position right away, because that happens a lot. Now, this is weaker than normal, because what's normal and natural, and if you go and study gaps, normal and natural would be an inside day the next day, an inside day here, meaning just something like that, maybe closing like that, and then tightening up, and then giving you an entry to buy it over there. But that's not what we have here. It's coming down. And it's not, unless it's at your max stop loss, and always have a max stop loss, whether it's 7 to 8%, if you want to use 10% on these and adjust your position size, or 3%, pick something and honor that stop, because otherwise it could turn into this thing that just kind of keeps getting worse and worse and worse. And then before you know it, you got a 20% loss on your hands. So don't do that. Let's go out another week. So by this time, I'm worn out of that, because you normally don't have a gap up like that fades that much. So really on this day there, that's where I would have thrown in the towel because it was trying to break above the high from the prior day and just wasn't acting right. So I'm going to back out of it. And so that's why I want you to study these because that happens a lot. Now let's go out to the end of the month. Okay, so we had that other gap that happened. So you probably bought some back this day because it's now clearing over that, or I would have bought some back there. And then you have this other gap. And again, then, as my friend Scott Sinclair would say, rinse and repeat. You tried the gap up there, it didn't work. Tried the gap up there, it didn't work. Well, it's gapping up again. Are you willing to do that one again? And I am. It's just how I'm wired. I'll just keep going back. It can get frustrating, but it is what it is. Some people just say, I'm going to do it twice, and then they give up, or 3 times they're going to give up. Hey, find what works for you. If it's set back up, I'm going to buy it back. So let's go to the end of this month. Let's just go to current day. So look, if you didn't buy it back there, you would have been just kicking yourself again, up 56%. Let's just pick one more of these and we'll go into the historical ones. You guys can study these at home on your own. Let's see. God, I don't remember. Let's just play through these real quick and I'll see which ones. I'm just going to hit the space bar, do one at a time to see. Okay, here's one that faded. So really your breakaway gap was on this day, and then that faded, and then you had another one here. And really you've got to study them to see when it's abnormal. And this day here, that's your day that's abnormal, where it was trying to hold in here. This is kind of normal and natural. This gap down was a little bit on the weak side, but it held above the low there. But this day on 8/7, that's when it got too weak for me that I would have, if I was in there and buying that gap up, that's where I would have exited. You know what? I'll just go through these. I'll go through them very quickly so we can get to the historical examples. Where is the one on here? Let's see. That's on 6/9. It's saying 6/9. Where is 6/9? Right there. Okay, so you get your gap up, and late in the day, it closes and reverses down. Well, on that day, I'd back away because it broke my expectations. It was trying to break out of this little consolidation, and it couldn't even hold there. So I'm starting to back away and reducing my position. So let's say I was going to buy a 2.5% position. Maybe I sold the whole thing that day, or was saying I'm going to give it until the low of this day to sell any or all of it. And then on that day, right there, that's where I'd be selling it on 6/11. So if you don't understand why, well, that's why I'm doing these brief. I would get into more lengthy things, but we're trying to keep these short. Okay, here's another one. This is on 6/10, INSM. And again, the reason why you would want to buy something that day, and then you can add to it the next day. And, I would actually add to it the next day, and I'd be adding to it on this day. Now, it didn't work, but at the time you didn't know that. But it still held the 21 day the whole time, so you wouldn't have to back out of those shares necessarily. Let's go to the next one. Again, another gap up. And as this is starting to accelerate through the day, I might speed that up or even increase my position size. I was in Vesco IBZ. Las Vegas Sands, so here's a mediocre one, right? It just, and you can tell that by the fact that the closing range was 45% on that day, and it just barely was staying above the pivot. So I wouldn't be increasing my position size. I know it worked, but I'm just being intellectually honest there that it just wasn't giving that gusto of a move. And it was kind of a small gap anyways, relative to the other ones. Here's a gap that just faded completely. So Monster Beverage. So it gaps up, and your first sign that all is not good is this closing near the lows of the day, but not enough to really know that it's broken. And then this next day here, it's not really doing anything wrong at that point, because lots of times they'll just come out of there. So as long as it hasn't reached your max stop loss, you're fine. You're not happy, but it's not a reason that you have to bail. Where I would be getting out of this would really be probably on this day there. And let's just go there. 18. So on this day, because my expectation was, okay, it's consolidating there a little bit. Looks like it wants to go on this day, and then you get an expectation breaker on this day where it's starting to fade already. And I'll just say, hey, I'm going to exit this trade, reduce my loss, and then I'll buy back if we get a nice close above there. See what ends up happening, and never happened. So you're just out of that one. This one, that was MicroStrategies, and nice breakout there, a little tiny baby gap, and then on this day, then that's failing. This one, NVMI, it's a little looser of a stock, but nice little gap up. And again, if you're just waiting for it to pull back in, it never happens until over there. Or little tiny little baby gap there. So I wouldn't buy much on that, but I just wanted you to have some examples to study. Here's Oracle. It's interesting as your base was really down here with your breakout there, but it's right at your 200 day. So it's in a weak position. So here's your gap up. And this is a big liquid name. So the more liquid they are, the more you're dealing with big institutions in there. So you've got so many players that it's harder for them to really manipulate things. Whereas the smaller cap ones, man, you get one big player in there, they could really move that stock around. So on that day, I'd be buying my position, my 2.5% position or whatever I've decided on, and then adding to some the next day where you get that follow through. Then it forms this little sideways, what I call a shelf. And I would be buying some on that upside reversal right there and be buying more on that little mini breakaway gap out of that, even though you had a weak close. Let's see what the next one is. RF. This one just fizzles. So sometimes the gap is fine and you don't know that it's going to fail and starts giving you signs on this day. Really on this day, that's round trip that and closing, that part of the gap there without really making a lot of progress is telling you it's just not ready. And yes, I, did go higher, but here's SE. You've got that little gap there. It handled itself well. I'd buy it there, add some there, and be adding to it there. Now, it didn't end up working, but again, when you go through this, you want to be intellectually honest and not say, oh, I'm not going to buy there because I know that it didn't end up going anywhere or it ended up going lower. Now, you could say that you are going to back away from whatever your purchase is on that day because of a bad closing range, 15% closing range. But if you sell on every 15% closing range, it's going to be, not saying that's bad, it's just going to be harder to hold things because you'll get that, more often than you think. Okay, let's see. TJX. Oh, this is one that got me. I saw the gap. I really liked it, that it was kind of a slow and pokey thing, and I gave it a shot. But then we had that weak close, and eventually just had to throw in the towel because that's not how they should break out. And I figured something like this might happen. And so you just never know until it happens. So if you bought some, let's say you paid this on here, if it hits your max loss, you sell it later in the day. If it hasn't hit your max loss, you want to give it some more time. Nothing wrong with that. And it just really depends on what your cost basis was. But really, by this day, you got to start backing away, and certainly by that day. Now you can always buy back over there, which was normal and natural. And I think this is our last one. So again, just a little tiny baby gap there, and it yeah, really nice move. So those were our historical examples, or our current examples. Let's go to the historical. I went through like 1,000 stocks before this, just trying to find some good examples, and then I decided to end up just going with the some of my old favorites. Let's see. Oh shoot, gosh, I have so many good examples here. Oh my gosh, I forgot it. We're already 30 minutes into this. Well, here, look at these stocks, and this is the downside of doing the short ones is there are a lot of good gap examples in here in this list, and this is over the last year or so. Yeah, basically over the last year for these. But I jotted down some of the kind of the more classic ones. Let's go to SE that aren't in that list. Let's see. And we're going to go back to February 26, 2019. So this is SE, and this is, it already broke out of this cup with handle here. Now the next day, I believe we gap up. So it's still a breakaway gap in my opinion. Some people might say that it has to be exactly out of the pivot. You know, trading is an art. I look at this as a breakaway gap because you had your larger consolidation here that it was, or cup that it was breaking out of. And you've got this massive gap up. Look, it closed, it was up 35% on that day. So this is a tricky one. If a stock moves this much and is this liquid already, that that is a very, very tricky one, because if you're buying it up there, your expectation is the next day it can come in here. In fact, that's your base case, is kind of your high and your low on your gap up day, staying within that the next day, and even closing down there. I don't even remember what this ended up doing, but if that happens, you've got to figure that the likelihood of you getting chopped up in that is very high. So this is when you want to go to an intraday chart and say, okay, where are some logical areas on there where I would know that, okay, if I buy it here, it should hold above that area. So I'm going to have to do more of these WROs on gaps and stuff that are more detailed, but that's what you have to have in the back of your mind, that would be normal. An inside day, and really what's kind of normal would be something like this, going sideways and then breaking out above there. And I really don't remember what this did. Let's see what it did. Oh, wow, that's nice. That's really nice. Wow, what a good sign. So why do I say that is because you've moved from 16 to 22 essentially. So if you just kind of split the difference in there, give or take, that that your midpoint. Well, I didn't draw that exactly right, but you can just see that visually that's in your northern hemisphere on your day two. So the shorts couldn't push it down, and the people who were long, while they didn't push it back above the high from the prior day, they're not giving up those shares. So that's a really good sign. So now this tells me that yes, it could still come in, like this and then go, but I really want to build my position in this. So the question is, what size? Not only you can answer that. Let's go out to the end of the following week. Well, that they made that actually easy for anyone who did a TWAP on this day because you weren't tested. When I go and I buy a TWAP, do a TWAP on a day like that, that is that big, my base case is I'm going to get shaken out of that position and I need to buy it back. So if I wasn't in it and I was waiting for another entry, I'd be buying it over there. But again, you always have to have your line in the sand of where are you going to sell it. And for me, it would have been that low there, because then that's managing your risk. Remember, I said it before, job is not to try to make money, it's to manage risk and then make money. Let's go out to the end of the month. And it just kept inching up, and came back and tested your 21 day. Let's go out to another month and just base building, and then is breaking out of there. So let's go. SE had another one on April 15th of 20. Okay, so here's a setup, really a sloppy looking base in there, if I do say so myself. Oh, that's because of the general market. Oh, that's COVID. Let's pull up the three-dimensional chess. That's going on. So this is actually a good base, because on a relative basis, that's very tight compared to what the market was doing. You can tell that with that RS line there, and you have that nice gap up in there. So this is giving you evidence that you should buy a bigger position because of the setup, given the context of a hot stock like this, finding support at your 200 day, not closing below it, which this is your 200 day, upside reversal down there, which I know people who would be buying it down there, and really gave you an entry on that day. Now it's on this gap. So if my normal ones were like a 2.5% position, I'd be doing maybe a 5 to 10% position there, because it's breaking out of this and it has that gap. Let's go to the end of the month. It's dueling around in there. That was nice of it to do. And then it just moves a lot higher. And again, that was, gap, and then another gap there, a little mini breakaway gap there. So if you had gotten shaken out of it in here somehow or never bought it, there's another breakaway gap and then kind of a continuation gap there. But we're not talking about those today. And then look at that move. What a monster. I don't even remember what this did. Wow. Let's go to the end of the year. So that's a huge move. Okay, so that's why you're studying these. All right, let's go to ZS, Z-scalar, and we're going to look at 528. Wow, another sloppy one. It's out of the COVID thing. Okay, so this one's really sloppy, tries to break out, fails there. Now let's go to the next day. Boom, massive gap. Again, when you have a big liquid name like this that's moving, up 29, over 29% on that day, just getting a toehold in there is going to be a game changer for you if you're comfortable with that. Again, I'm not an investment advisor. I can't give investment advice. This is just my take on things and sleep therapy. So that big move, and my base case is I'm going to get shaken out of those. So if you're not comfortable with having a base case of getting shaken out of something, wait for a setup and we'll show you some setup. So here, that was that move up, then further follow through the next day. But if you didn't want to buy those, that would have been probably your best entry there and there. Let's go out just to the end of the year, because we're 40 minutes in. I was trying, kids. So this was your gap over there. Those were the areas where I was saying, you add to there. It was not an easy one. Okay, let's go to CROX. I'm going to do a whole episode on this one, because this was a very, probably learned more trading this stock than anything else ever. But the lessons I learned weren't the ones you would think. Okay, so here was this cup without handle, or you could say that there was a little loose handle in there. And I already had a position in this one. And so what I do is, if I'm in a stock and I already have a position and it gaps up, I gun it. Now, I have a very high risk tolerance, but in my career, some of my best trades have come from already having a position in something and then it gaps up. And I know people who will just sell into that. Nothing wrong with that if that's your style, but I add to it. Many times I end up regretting it, but that is just my style. I add to it because I want to have the biggest position in my best stock that I can possibly have. And if you get that gift of a gap up, I like to add to it. Yes, when I add to them and then they come in on me, boy, do I regret it. It makes it very hard. That happened recently with, I think it was CCJ. And boy, made for a bad day, but I would do the same trade over again. Because you have to have a system and stick to it. It's like if you're playing blackjack in Vegas, if you've got a 16 and the dealer, has a 10 card up there, what are you going to do? You're going to do the same thing every time. Or you've got a 12 and they've got a 16, or a 6 showing, you're going to do one thing. A 10 showing, you're going to do something different, but you're going to do it the same way every time. And sometimes you're going to get lucky, sometimes you're going to get unlucky, but you're trying to play the odds and a system. So on this one, I'd be just gunning the heck out of it. And sometimes I get very aggressive with them because this has the potential to really be a game changer. Let's go out another week. And it just inches up there. Let's go out to the end of June. And, I'm going to leave the rest of this for another time because I want to walk through that whole thing. But yeah, monster move. Okay, let's go to Meta. And what date did I have on there? 7/24/2013. Okay. So here's Mark Zuckerberg's, wait, that's not, okay. Here's, the IPO base that never happened over there. And this thing was a dog over here until you had this game changer of a day on July 25th, this big gap up. When you have a big gap up with an institutional stock like this, I mean, look at that, up 29% on all of that volume. I mean, volume is dirty, but that is a massive amount of volume, the highest level it's had, besides this IPO. So really a game changer. Those things, well, when did that, the folks who at the beginning are saying all gaps fill, did that gap ever fill? Huh. Study history. So stay in school. So just having fun. All right, so here you've got this massive gap up, and if you buy some that day, then your expectation again is for it to come into here or something to shake you out. But if it were to come all the way down into there, man, that stock has got serious problems to fill that gap. So you've got this in here, and you're hoping that it just goes sideways and moves above there and gives you a place to really gun it, because you're just trying to get a toehold on the gap up day. If you don't have a position already, which there would be no reason to have a position in this one until the gap up, then you're just trying to get something established, and then you can add to that. But let's go out a week. So it just gave you that one day right there to really gun it. So if I had bought a 2.5% position there, and when I say what I would have done, I'm saying if I'm trading perfectly, so you want to assume that you're trading perfectly. Like I could have been there and not bought it at all, or bought it completely differently than how I'm saying. But when you study this, you want to know, what do your rules say? Your rules, not Mike's rules, your rules on how you handle it. And so I know myself, let's say I got a 2.5% position there and I want this to be a 15% position. I'm gunning it on this day because now my expectation is that it's not going to go back. So I might make that all the way up to a 15% position on that day, with putting a stop in at the low of that day and a low of this day for my shares, and be willing to back out of that and then have to buy it back later. And so it just keeps going and gives you another place, another little mini breakaway gap right there off of that little pullback. and then it just keeps going, going. Okay, so let's just see what ended up happening. Let's go out. Oops. 17. Let's see when that did close. Oops. Oops. That went all the way out to, let's go to the monthly. Oh, so that's where your gap was over there. Where's the gap fill? All gaps fill. I read it in a book somewhere. Everyone says it online. All gaps fill. Mike, don't you know gaps fill? Why would you buy a gap? Well, anyways, sorry. Okay, we're going to do our final one. Oh, this is the monster of all monsters. BlackBerry. And for any of you who are younger, don't remember RIM or Blackberries. Why isn't this working? Hold on. 3. 1222. Okay. So here was BlackBerry, back in 99. It was RIM at the time. Monster move, fell apart completely. And here's what it looked like before that massive gap. Now, you did have a breakaway gap over there. Well, it's not really it's debatable. Why I say it's debatable is like, how big of a consolidation is it there? Is it a continuation gap or a breakaway gap? It's there's not a right or wrong. I could argue both sides of that. Too early in the move for it to be an exhaustion gap, in my opinion. So here's what it looked like before the move, and then this day I'll never forget that big gap up. And my job responsibility was managing the institutional buy list with Bill. And, because he was busy in meetings all day and doing other stuff and trading, that, my job, as well as trading money for him, being a portfolio manager, was really managing the list and looking for things. And this was what it looked like on, let's go back to the 19th. On that Friday, and there was no reason for us to put it on the list. It had this big move. We didn't have it on the list. Let's look at it on a weekly. It was up there as in 3 weeks tight, but we had just missed it, and there was really no compelling reason to put it on the list there. Now you go forward a few days, and you get this massive move, and I was just too scared to call Bill up because I knew he wouldn't want to put it on the list that day with it being that extended. And we had missed, the move, and it was up 51%. I mean, the only thing wrong with that is it wasn't up another 0.5%, but 51% on one day on a massive stock. That was a game changer. And you do need to buy some there, but we didn't buy any. And, I was just spooked to even call him about it because I just didn't want to deal with them. And then a couple days later, so this is around Christmas time. So this is the day after Christmas. It must have been that Sunday. I don't remember which day it was when we were talking. And he was like, Mike, now when that happened, you got to make sure that you let me know. But if I would have let him know that day, he would have said, well, we can't do anything with that. It's up 51%. But we did put it on the list sometime during this little bit. And look at, there it is, the end of the year. So this is telling you everything you need to know. So it's in the spirit of a high tide flag, meaning a rapid advance and not giving up much gains. Is it a high tide flag? Of course it's not. But it's in that concept, that theme of moving up, and this is your new equilibrium, up closer to 70 than it was in the 40s. Not too long before that. Let's just go out another week. This is the day. This is the day you gun the heck out of it. You've got an upside reversal, outside day. So it went underneath the lows over here, shook people out that would have had a really tight stop on there, then goes and closes up. And I would buy the heck out of this now, and this was the one that made me want to go and study gaps, because now we've got gaps all the time because of the Reg FD, where things gap up on earnings and gap down on earnings. But this was early on where that wasn't the issue. You didn't have many gaps back then. And historically, you didn't have a ton of gaps the way we have now, thanks to, those changes. So there it goes. And let's just go out to the end of the month, and it's just a monster move. And this is really the day you want to buy it, and then add to it on this day. Let's go out just to the end of July, see what ended up happening. So that was your gap. That was your time to add, and then it went and did this little base here, and there's a story behind that, but there's lots of stories. And shoot, 51 and almost 51 and a half minutes now. And I told myself that we would be short, but what can you do? At least it's not 3 hours long. So this was the breakaway gap. Again, I'm just stressing, there's so much risk with gaps, and there are a lot in there that go and study all the gaps where I showed you, every single one of them in that list. Study them, understand the risk before you start putting this tool in your toolbox, because if you don't have a stop in mind ahead of time, you're flying blind, right? You need to figure out that, and there is no perfect stop. 3% is not perfect, 7% is not perfect, 10% is not perfect. The low from the day before is not perfect. There is nothing perfect. This is something where your goal is to just try to get some shares on that gap day, so then you can manage that position by pyramiding into it when you have a better risk entry. But as you saw with some of those, they just gap and they continue to move, and those will eat at your soul if you never get a position in them. So this was the end of this one, a little bit longer than the back to the basics or back to the beginning episodes have been, but it is what it is. I will say, I'm not sure when I'm going to release this. Again, I'm recording this on September 4th, but if this is released before these days, I will let you know. On September 27th, I'm going to be up in San Francisco speaking at the meetup group up there. Hans has put some information out. I've retweeted that on my X handle or Twitter handle. It's mwebster1971, and you can search for the San Francisco meetup. And I'll be speaking there on Saturday. I think I'm going to go over the Quicksand Grateful Dead, most likely, and that's going to be a lot of fun. It's a two-day event, and they're also doing it online. If you can't be there in person, I'm going to be there in person on Saturday and early Saturday morning or Sunday morning. Then I've got to catch a flight back home. The following week, on October 4th, I'm doing an IBD workshop. It's the Founders Club. It's not just for Founders Clubs members. They are selling tickets for that. If that's something that is in your ability to pay, then that's on October 4th. And it's going to be a ton of fun. I'm going to be speaking with Arusha and Charles Harris at the end of that event, and we're going to just be doing an interview. It should be fun. We're going to keep it loose and kind of talk about our what we've learned over the last 30 years, and I don't want to give anything away. We had a little meeting on it today, and I think it's going to be a lot of fun. So that's on October 4th. And then in Florida, this is going to be a ton of fun on October 18th and 19th. Matt Caruso and his buddy are putting on a workshop in Fort Lauderdale, and I don't think I've ever been to Fort Lauderdale, so I'm looking forward to going there. And I think we have something late Friday night, and then the Saturday and Sunday. I'm speaking on Saturday. I think I'm doing a little thing on Friday night with a small group of people, and then on Sunday, Jason Shapiro is going to be talking. He's one of the market wizards in the Market Wizard books. So I can't wait to watch him, frankly. And that should be a lot of fun. So I'm going to be out and about. And then when that all is done, I'm going to try to do some Webby walks here in Austin. And that's a lot of the reason why I'm doing these short episodes, because I got to get a lot of these in the can, because I've got a lot of travel. I'm traveling next week. I'm traveling a lot this till the end of the year. So just need to get a lot of these short ones in the can to put out, because I try to put these out every Saturday. And I have. hopefully I can continue that. And with that said, no music on these. I've been doing a good job of not rambling on about things unless they're important. But eventually I'll get back to my full length episodes because that's the ones I like. I'm doing those to leave something behind for my kids and future grandkids. And that's what this whole series was really about. But I also knew that, I wanted to get a lot of foundational info out so people could understand things. And I know everyone doesn't have 3 hours every weekend to watch one of my episodes. So that's why I'm doing these shorter ones for now, but I'll be reverting back to those and doing interviews and stuff and as soon as I can. So with that said, we're pretty much done. Remember, your tuition for all of these is always, right? Be kind. Go be kind to a person, an animal, an insect, anything in between. Go help somebody out. You don't have to tell the whole world about it, or you can. Sometimes you can tell folks the nice things you do, and a lot of the things just keep to yourself and just try to put that energy out there and try to convince other people to, just be kind. And the more of us that are kind, I think it's going to make a difference. If you don't try, nothing ever happens, right? So try. I'm trying with this series. Please share this, share it on Twitter, share it on whatever. Let people know about this. I'd really like to help people, and that's why I'm doing that, and for my family. And so hopefully you got something out of this. Be careful with gaps. Please be careful with gaps. Peace out.